Baby Corp had 100,000 common shares outstanding on December 31st, 2019. During 2020, the company issued 12,000 shares on March 1st, retired 5,000 shares on July 1st, issued a 20% stock dividend on October 1st, and issued 18,000 shares on December 1st. For 2020, the company reported net income of 400,000 after a loss from discontinued operations of 50,000, net of tax. The company issued a 2-for-1 stock split on February 1st, 2021, and the company's financial statements for the year ended December 31st, 2020 were issued on February 28th, 2021. Calculate earnings per share for 2020 as it should be reported to shareholders. Ooh, we got a fair amount to work with here, don't we? Okay, so let's start with our weighted average earnings per share number. So we're going to have let's start with labeling our table here. So let's label event. Just a sec. Okay, let's label event. Let's label dates, shares outstanding, restatement, year, fraction, and then weighted average. Okay, so this is our table here. So these are headings. So let's start with the first thing we're going to do is the beginning balance. Because the company isn't being created in 2019, they had, or in 2020, the company is starting with the beginning balance. Beginning balance. So, and this is going to go from, so they had 100,000 common shares. So that's what we've got here. And how long is this going to go for? It's going to go up until March 1st. So we're going to go, this is going to be January 1st to March 1st, and then something's going to change. So this is going to be January, February, March, three months, 2 months, January, February. Yeah, sorry, January, February, 2 months. It's going to be the numbers there. Okay, then on March 1st, the company issued 12,000 shares. So we issued shares on March 1st. And how long is this going to go for? It's going to go until July 1st. July 1st. We're going to issue 12,000 shares. So our total now is going to be 112,000. Remember, we need this to be cumulative. Okay, and that's going to be March, April, May, and June. That's going to be 4 months that nothing changed. Then on July 1st, we're going to retire shares. Retire shares, and this is going to be on July 1st. We're going to retire 5,000 shares. So 112,000 minus 5,000 is going to give us 107,000. And how long is this going to go for? October 1st. So July, August, September, it's going to give us 3 months. Okay. Then what happens in October? Issued a 20% stock dividend on October 1st. 20% stock dividend on October 1st. Okay. The company issued a 20% stock dividend and issued 18,000 shares. Okay, so on October 1st, we're going to need to take 107,000. We're going to need to multiply this by, so when is this going to? October 1st to December 1st. So we're going to go stock dividend. It's going to be October 1st to December 1st. And this is going to give us 107,000 times 20%. which is going to give us a 20% stock dividend. We're going to get 128,400 here. And what we also need to remember is that we need to restate everything prior to the stock dividend. So because it's a 20% stock dividend, we're going to multiply all of these by 1.2. And if we take 107.2, this is how we got the 128. So 107 times 1.2 is going to give us this 128,400. So this is already restated after the stock split. But we need to make sure that we're weighting the stock split for the full year. Issued shares, the last transaction is going to be December 1st. We're going to issue 18,000 shares. So we're going to add 18,000 to 128,400, which is going to give us 146,400. We don't need to restate it because it's already after the stock split. And this is going to be 1 of 12. Oh, and we missed this one. October, November is going to give me 2 of 12. Okay, so if I multiply these three through, if I say 2 divided by 12 times 1.2 times 100,000, that is going to give me 2 divided by 12 times 1.2 times 100,000. Yeah, these are going to give me my weighted average share numbers. So rounded, this is going to be 20,000. This is going to be 44,800. This is going to be 32,100, 21,400, and 12,200. So if we sum these all up, we're going to get 130,500 weighted average shares outstanding. Okay. Now let's look back up at the question and see if we picked up everything. So we definitely picked up this. We picked up this. We picked up this. We picked up the stock dividend on October 1st, the 18,000. And then we've got the net income and the discontinued operations numbers. So then we're going to see, okay, so we've got net income, discontinued operations, and then what about this line here? This is interesting. The company issued a 2-for-1 stock split on February 1st, 2021. So our financial year end is December 31st, but we're told that the company issued a 2-for-1 stock split on February 1st. So what do we do with that? It's after the financial year end, but it is before the financial statements were issued because here it tells us that they were issued on February 28th. Now, you may remember from the lecture that we had said that IFRS states that if there's a stock split after the financial year end, but before the financial statements are issued, we want to reflect it in our financial statements so that it's a like-for-like comparison with the current share numbers. So a stock split two for one is going to double our share numbers. So we're basically going to say 130,500 times 2. It's now going to give us 261,000 shares. So this is the weighted average number of shares adjusted for the stock split. Okay, so up here, of course, we restated the stock split that happened throughout, or the stock dividend, I'm sorry, that happened throughout the period. But after the financial year end, there was a stock split. So what that means is that every share became 2 shares. So we multiplied our weighted average number to get a like for like number after the stock split. And that's for comparability purposes, because when we issue our financial statements, the investors are going to be comparing it to how many shares that they have. And if there's $1 per share that was earned during the financial period, now that share is actually only worth 50 cents because one share is now 2 shares, if that makes sense. Okay, so now let's deal with our income numbers. So we've got income before discontinued operations. Actually, we should call it income from continuing operations. And we've got discontinued operations. And then we've got net income. So let's see what numbers we have from the question here. So we've got, okay, for 2020, the company reported net income of $400,000 after a loss from discontinued operations of $50,000. Okay, so we know that this number is $400,000, and we know this number is a loss of $50,000. So our income from continuing operations must be $450,000. Okay. So what are our earnings per share numbers then? So if we have 450,000 divided by 261,000 shares. So this is going to be 450,000 divided by 261,000 shares. It's going to give us $1.72. Then we're going to have negative 50,000 divided by 261,000. And that's going to give us negative 19 cents, a loss of 19 cents per share because this is a loss. And then net income per share, which is going to be 400,000 divided by 261,000 weighted average shares, is going to give us $1.53. And this is what our financial statement section would look like, although likely a little bit neater.